Hey everyone, how's it going? This is Richard, and welcome back to the Stock Market Outlook video brought to you by DeepView. Once again, if you're curious about the charting application I'm using right now, which will be much more than just charting application very soon, click the link down below in the description and join the waitlist. With that said, we're going to dive right in with market analysis. I'll go through the current top dogs, in my opinion, the potential true market leaders, and then we'll discuss a little bit about the overall state of the market and my outlook for next week. So with that said, let's dive right in and start with the market indexes. So first things first, we've got the QQQ, the NASDAQ ETF here. Overall, since this day right here, we've been pulling back into that 21 EMA area, also the top of this prior range. This day was definitely pretty nasty. Volume wasn't too bad on many charts, but we are pulling back pretty hard here on the index, as well as many stocks. And there have been a few casualties in terms of leadership. There's still a decent amount hanging on and acting well above their 21 EMAs. Just really in general, things were extended, got a little ahead of themselves above their 10-day simples, 21 EMAs. And it was kind of natural that we needed some type of RAS consolidation, what have you. And so far, this will be setting up a lot of nice charts. If we do hold above that rising 21 EMA, as well as the top of this prior range, obviously, if early next week we continue to decline and we see more and more stocks breaking below their key moving averages, prior tops of bases on high volume, that would change things. But as of right now, things aren't looking too bad in terms of the charts. We just kind of needed some type of rest in the market, after advancing, 10+% in just a few weeks. So it is kind of natural at this point. But, looking at this chart, we're still above a rising 21 EMA, 50 SMA as well, above a declining 200-day moving average. I'd love to see this start to really flatten and eventually, support price. And I think that will happen if we rally here off that 21 EMA area and continue this move up. But we'll just have to wait and see what happens. In the very short term, things are negative, but in the intermediate term, things are healthy. We're still in that uptrend above a rising 21 EMA. Looking at the SPY. You can see that this is very similar, holding above a rising 21 EMA. It's a little bit deeper down this pullback. You can see on the QQQ, the top of this range was right here, and we're above it. Here, we're kind of back into that base a little bit in this kind of chop area here where a lot of moves have happened. So I'd love to see us push higher from here and definitely defend that rising 21 EMA. We're back above that, or we're continuing to be above that rising 21 EMA as well as the rising 50-day moving average. Also, I forgot to mention, if you do find my analysis helpful, please go ahead and take the time right now to leave me a like down below. It just takes a few seconds. It helps me out immensely. And also, as I go through, my market analysis, I love to hear your thoughts as well. So give me one sentence about what you think about the current market in the comment section, and also your top idea that you're watching very closely. I'd love to see those, and I'll try to respond to as many as I can. So definitely go ahead and leave a like. I'd appreciate it immensely. And let's continue on and take a look at the IWM, the Russell 2000 ETF. So here you can see once again, pulled back sharply over the past 5-6 days. We're back near the confluence of the top of this prior base, as well as the rising 21 EMA. This bar was pretty negative, a little bit of an upside reversal here on the 10th, and we'll just have to wait and see what happens. Do we respond from this area, or do we continue to undercut this level, which definitely would be negative? That 21 EMA is kind of a really nice guardrail for that short-term trend. And here we're above a rising 21 and 50 SMA. The 200-day is kind of flattening here. And eventually I'd love to see this kind of turn up here and, see us continue to push higher on these indexes as well as leading names. With that said, let's move on to a few key stocks as well as the SMH ETF. Let's take a look at that first. This has pretty much been, the leading group and sector, and we're above a rising 2150 SMA. The 200-day is pretty much flat as of this point, and we're well above this prior range. So I'd love to see us continue to hold a rising 21 EMA, and I like the recovery here on Friday. I'd love to see, some more chop for the next week or so, and then a resumption to the upside, breaking through these prior highs, which lines up with pretty much this level, which I've talked about in the past, could be a potential area of resistance, and turns out it has been. And we'll see if we can push through this kind of high volume area, which is kind of logical resistance, and really kind of push higher towards the top of this prior range here. So that is SMH. Moving on to kind of the mega caps, let's start with Google. You can see that this is pulled back hard. This was kind of hit with some negative AI news, which is kind of interesting. I think their demo didn't turn out too well. But, just looking at the bigger picture, it's still in a longer term downtrend. It got rejected at the declining 200-day moving average. It's not going to be, the most fast growing name because of AI. That's going to be smaller companies that's kind of focused in that area. So, I'm not really looking to trade this name, but it's a good kind of indication of the overall health of the market. And it's still, a big cap tech stock. It's pulling back hard into that 50 SMA. This volume to me is no good. It suggests distribution. And I wouldn't be surprised to see it, continue lower through that 50 SMA, maybe test these lows or even undercut these eventually. But we'll just have to wait and see what happens. I'd love to see it eventually kind of build out a stage 1 base and get really through that 200-day moving average area. And now that kind of 105 level is kind of a key spot in terms of potential resistance. It lines up with the bottom of this base as well as the top of this range that's been forming for the past few months. Meta, we had that nice earnings gap up, which is definitely a positive indication. We were pulling back a little bit. I wouldn't be surprised to see this test the 21 EMA, but this kind of shaping out a little bit of a bottoming pattern. We'll have to wait and see what happens. But once again, this kind of 184 to 200 level, there's a lot of volume being traded in this area. So it's definitely going to have to work a little bit to get through that spot. Moving on to Tesla, this has rallied super strong and is kind of one of the liquid leaders here off the bottom. Really nice action since this upside reversal outside day here, and then the earnings gap on the highest volume in quite some time. But we are pulling back a little bit. We're still well above our rising 21 EMA, so that short-term trend or that intermediate-term trend is still intact. The 50 SMA is now rising. We just got a little bit stretched, and it was kind of an obvious spot looking at this level. This is very key looking back at the bottom of this base. And you can see even back here, it was a pretty significant spot. So wouldn't be surprised to see it, take a break at this 200 level, this potential key resistance zone. And it'd be very constructive to see it base for 1 week, 2 weeks, let that 21 EMA catch up to price, even the 50 SMA catch up to price, and see it kind of continue to build all that consolidation and eventually push through that declining 200-day moving average. So, in the short term, so far, this is just a super strong move off the bottom, and we just have to wait and see whether it can prove itself and, get back above that long-term moving average. Microsoft, you can see also pulling back in. This has some positive AI catalysts. Once again, it's not going to be the fastest mover because of that, but it's definitely looking a little bit more constructive than Google. But it's also pulling back over the past few days, but it's back above all those moving averages, but still kind of in that longer term decline and just kind of chopping up and down, needs to form that stage 1 base. NVIDIA, super strong off lows, pulled back in on Friday, still above a rising 21 EMA, 50 SMA. The 200-day is now declining and maybe even increasing just a tiny amount. And we'll have to see whether it gets supported at that key moving average and continues to push higher, as this is kind of in one of the leading groups. It's actually got kind of two themes working for it, semiconductors as well as AI. So that's super promising, and we'll have to see whether this can really become a liquid leader that continues to perform. Lastly, we've got Apple, which is hanging in there above that 200-day moving average. Nice upside reversal, oops reversal here on Friday. Not the highest volume, but holding that 200-day moving average and is still above that 21 EMA, and just kind of chopping sideways here. Once again, this kind of level is going to be key, whether we can push through that and make its way towards all-time highs. So that's pretty much a quick run through of the market indexes as well as the big cap tech stocks. And let's move on now to the potential true market leaders. So here we are. These overall held up pretty well. Let me take a look at that weekly closing range here. You can see that, for the most part, these held up pretty well, especially at the top here. AHR pulled back really hard, and this is one of the leaders that, is breaking down a little bit through that 21 EMA. It looks like it maybe needs a visit to that 50 SMA, but we'll have to see whether this can form out a little bit of a base. That would definitely be constructive, but we'll have to see. This is kind of a logical spot where it could find support around that 28 level, which lines up at the top of this prior base, as well as that 50 SMA. So we'll have to see what happens with this name. AI, you can see pulled back hard. It was super extended, and now it just remains to be seen whether it can consolidate and form some type of base that you can trade, and definitely needs to tighten before you can really manage risk adequately up here right near this potential pivot. So we'll have to see what happens there. NVIDIA, I already talked about. Tesla as well. ALGM just trending nicely, trying to ignore that market pullback. Nice action on Friday, but still a little bit stretched above that 21 EMA. I wouldn't be surprised to see a 21 EMA test, sometime in the next few weeks. ACLS, very similar, really nice action, just ignoring the market in general, and just a beautiful trend above rising moving averages. This is the type of stocks that we want to be in after entering at a low risk entry, where we can, manage our stop loss pretty tightly and get that immediate expansion, immediate profit. So we've got that cushion that we can use, and then we can just ride that trend above the moving averages. Alpha as well, after the earnings gap, has acted well. Won't be surprised to see this consolidate a little bit. Let that 21 EMA catch up to price, but remains pretty strong. And CRDO also pretty strong above that 21 EMA, holding this bottom here, 17.63, 17.5 level, and just pretty much going sideways as the market is pulling back in and going sideways on declining volume. So some key things to watch for stocks you're taking a look at. Look for low relative volume pullbacks, look for them holding that 21 EMA, and look for them holding these strong moves that they've had and not giving much back. That's a sign that they're showing relative strength and could really take off if the market recovers and bounces off that 21 EMA area. So that's pretty much it for the top dogs. Let me know your thoughts on these names, as well as any that I should add to this list. Just let me know down below in the comment section. And lastly, let's just take a quick look at this bigger list, which was kind of my first cut from last week. And I just kind of really want to focus on this weekly closing range. Let me get rid of this scan here. You can see that many of them pulled back pretty hard. And that's pretty much what a lot of stocks did. A lot of them just kind of went sideways, consolidated. Some broke down like this, but these weren't really the high quality names. A lot of these were the ones that had a lot of overhead supply, and just had to deal with that. And it's kind of shaking out the names that weren't quite as high quality, so we can kind of focus on those real potential leaders, and those become a little bit more obvious. It's really on the red days and the market pullback days that we kind of get more information about what is holding up well and what the institutions really want to accumulate, what they won't let pull back even to those key moving averages. So that's pretty much it for this video. I hope you guys enjoyed. If you did, please go ahead and leave a like down below, subscribe if you're new to the channel, and I'll see you guys in future videos. Take care.